All right, welcome back to another video. Today's video is what should you know as a passive investor? So I've come up with a list of 11 topics that every passive investor should know when they're getting into a deal. First off, when you're talking to the GP team, the general partner team is likely the sponsor or the person that is taking an active role. So you don't have to worry about, as a passive investor, you don't have to worry about dealing with termites, toilets, tenants. That's what the general partner needs to worry about. So first off, as a passive investor, do I know, like, and trust the sponsorship team? So if there's, let's say 10 people on that team, you may only know one or two of them, and that's okay. But do you know that person well? Do you like them? Do you trust the team? You're going into business with this team, and so you at least need to know, like, and trust the team. Do you actually know them? Do you get along? Do you trust them with your hard-earned money? Typically, these deals are about $50,000 as the minimum investment, but that can go up to millions of dollars. So do you trust them with your money? The second topic is the track record. What's their track record? So sometimes an operator may be new or a general partner may be new, and that's okay. Again, it's a team sport. And so what's the track record of the entire team? How many deals have they done? Have they done deals together? Sometimes there's 8 people involved and they've never done a deal together. So what is each person going to be doing in that deal? And we'll get to that in a little bit. How many of these deals have gone full cycle? And full cycle means it's sold or it's been refinanced, but basically the business plan has been completed and they're able to sell that property and return money to investors, or refinance the property and return less money to investors, but now it's going to be cash flowing long term. And then finally, what is the return on investment versus what they actually had projected? So it's easy to project numbers, but what is the actual ROI that their passive investors have received in the past? What are the roles of the team members? Sometimes some of the general partners are brought on more as consultants. They have a lot of experience, a lot of knowledge. Maybe they have net worth, liquidity, but they don't take necessarily an active approach, and that's okay. However, if you're being told that, oh, so-and-so has done 100 deals before, are they actually going to be involved, or are they just on the resume? There's a big difference in that, so just be wary of that. The next topic is, what's the business plan, and have they done a similar deal like this in the past? So there's so many different strategies in real estate. You can buy and hold a property, you can fix it up and flip it. Have they done a similar business plan like this in the past? And each business plan is going to be totally customized, but have they done something similar in the past? The next topic is ask for referrals. If a general partner is not able to give you referrals, maybe they are brand new. See if someone on that team would give you some referrals to speak to. Even after my first deal, I was able to offer 2 to 3 referrals that other potential investors have been able to reach out to. And I encourage that, because at the end of the day, as a general partner, I'm not trying to scam anyone, not trying to steal anyone's money. I want my investors to be extremely comfortable, because again, they're letting me use their hard-earned money and trusting that we're going to provide a good return for them. So the next few topics are about the deal itself. You're still going to ask the general partner this and the general partner team, but the next are about the deal itself. What are the projected returns? Now, this should be in the emails that are sent to you. This should be in the pitch deck, but let's just say you, for some reason, you don't have a pitch deck, you don't go to the webinar, and it's not in the emails. That's actually a red flag, but it may be in other documentation. So see if you can find that, but you want to know what the projected returns are. In our deals, our goal is to return at least 80% in 5 years. Ideally, we like to double people's money in 5 years or less. And then what's the timeline? There's a lot of different investors out there that have different plans, different strategies. We like the 5-year hold. That gives us flexibility. If we're in a recession, maybe we don't sell it today, but maybe we still have a few years left. And so we want to wait and get better returns. There's other people out there, other teams out there that do 7-year hold, 10-year hold, even 18-month hold. And so you want to know what the business plan is, what the timeline is. And then what's the going in cap rate and what's the reversion cap rate? So the going in cap rate is a capitalization rate, and that will vary. Every market is going to be different. Every asset class is going to be different. So if you're looking at a luxury apartment complex, it's going to be lower than maybe a working class, like a C-class blue collar apartment complex, which would be higher. And I'm not going to get into what a cap rate means, but a higher the cap rate is, the lower the value of the property. And then what's the reversion cap rate? I've heard terminal cap rate before. I've heard ending cap rate. Regardless, what is the cap rate, the projected cap rate when this property is going to be sold or refinanced in 5 years, 10 years, 7 years, whatever that time frame is? Ideally, you want conservative underwriting. So you always want the cap rate at the end of the holding period to be higher than what you're buying it at now, just to be conservative. Next question to ask is what is the financing? What does that look like? Is there a lot of leverage on the deal? So is it 80% leverage plus maybe there's some seller financing in there? Sometimes there's preferred equity or hedge funds, private equity that come in and put 10% down. So you just want to know what the financing is like. And then additionally, you want to know, is that a fixed rate or is that a floating rate? A fixed rate is like a typical home loan, like most home loans, where regardless of what the market is doing, the interest rate is fixed. It's not going up or down anywhere. But then there's also a floating rate, and that's an adjustable rate mortgage. Those are not super popular with homes, but there's like a 5-year ARM, adjustable rate mortgage. In commercial property, floating rates are a lot more common than they are in residential. Floating can be okay in some periods, but filming this in 2023, interest rates have skyrocketed over the last 12 months or so. So there's a lot of people that are in a great danger of losing those properties because the interest rates have gone up so much. And then the next question to ask about the deal is, have the general sponsors, have the general partners done a market survey? So do they know the vacancy in a market and in a submarket? So a market is going to be like Nashville or Dallas in general. A submarket is going to be a much smaller area. So in Nashville, there's about 25 different submarkets. And so sometimes that's neighborhoods, sometimes that's counties. But what is the vacancy in that submarket? And then to go a couple levels deeper, have the sponsors actually walked this property? They should have. Have they walked local competition or competitors? Have they gone in to pretend that they're a tenant into 4 or 5 other properties right around this to know what other amenities that those competitors are offering, what the unit mix is? The unit mix is like a 1 bed, 1 bath, 2 bed, 1 bath. So are they comparing like properties with like properties? And are they comparing like units with like units? Now, every property and unit is going to be different, but are they using their best judgment to understand what the potential rent growth would be? And then also, do they know the crime in the area? Because even from a block to block perspective, crime can be totally different. And so are they taking into the crime? Are they looking up the crime in each area? Final topic I want to bring up is, where are they getting their income and expense percentages, the growth over the next 3, 5, 7, 10 years? There's a lot of third-party data out there that is very expensive, but a lot of the general partners have access to that. So are they taking that third-party data into consideration? Are they just guesstimating, or are they using some local knowledge? Maybe they own other properties in that market already, which is very common. So maybe they already know what the rent growth and the expense growth is going to be. And then also, good operators, good general partners rely on a good property management company to give them more information too. So usually what we do in our deals is we underwrite the deal, then we send it over to a property management team that we trust, who has a lot of experience in that market and in that submarket, and they're able to give us a separate budget. So we take those 2 budgets and kind of look at both of them and see maybe property management companies a little high or a little low here, or a little high, a little low. And so we use our best judgment and come up with underwriting. There's also questions that you want to ask your partner or your spouse, right? And that's, can we part with this money, with our investment, for the 3 years, the 5 years, the 7 years, the 10 years? Does this meet our criteria? Do we know, like, and trust the sponsorship team? Do we know what we're really getting into? I know that was a lot in a very short time. Feel free to reach out to me, hkigllc.com. My name's Charlie. Hope you have a great day. Thanks for watching.